Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update. We're going to touch on where we are in the S&P 500 today. We're going to touch on the inflation report that came out this last week, as well as interest rates. And then we're going to go through all the trades that we had on last week, that we still have on, and what we closed out and what we're moving forward with, and the trades that we're looking at this next week. I think it's important that we understand all the different strategies and the ways that the rich are getting richer so that we can make money in any market. I promise we're going to dig into many detailed option trading tips and tricks. So after you hit that like button, be sure and subscribe so that you're informed of different videos that are coming out and we can profit together. Also, be sure and download that free options workshop in the link below. It talks about the benefits of trading options over buying stocks outright. Disclaimer, I'm not a financial planner. Please do your own research. And if you're new or learning options, I do recommend you start small. All right, guys, let's take a look at where we are in the market this week. You can see on the chart right here, the 5-day chart on TradingView, that we started the week up here around 45.04 and ended down at 44.64. So down, almost a percentage point for the week. We were now looking at, let's see, if we go year to date, we're still up quite a bit, still up 15%. A couple weeks ago, we were up 18%. We've made a little pullback. So we're, still up 15% for the year. So, hopefully you've taken some off the table. Maybe you've got some calls on, leading a little short. Maybe IVR is so low, so I've taken a lot off the table, and I'm less than 50% invested in the market, looking for even a little bit further pullback. But it's probably been overdue. I think the credit downgrade was the catalyst for the recent move down, and we had a similar move in 2011 when we were downgraded from AAA to AA plus credit, but the big news for the week was the CPI report, the inflation. We came in, the CPI index, it came in at 3.2 from 3% in July, which was about what was expected. Housing, you can see, so we were up 0.2% for the month, and housing was a big driver, shelter up. But housing was up 7.7% from a year ago. So that is still the major driving force for inflation right now. And then the PPI report came out Friday, and it came in at 0.8. I think we were expecting a 0.1 to 0.7% range, still under 1%, a little bit higher than expected. But the big move was the CPI report. Looking at interest rates, we are still, we're in that 5.25 to 5.5 and expected to stay there through the next September report, and then November, December, January, still expected 5.25 to 5.5. It's not until March where we may look like we're going to be cutting rates, but I have a feeling it may even move out further than that. The way that good old Jerome Powell is speaking. He may wait a little bit longer to make sure that we've got inflation in check moving forward. So with that, let's go ahead and jump into the trades that we've got on. There is no FactSet earnings report this week. Normally I go over that, but it looks like the next one's coming out in early September. So let's start off. Crude has been having a big jump up. We are at 83 right now. The week prior, we were at 80, I believe. Yeah, we've been moving straight up. So what we've got on right now, if we look at our positions, I've just got a credit spread or a iron condor on with 5 days to go. And if we put it in curve mode and analysis, we can see where we're at. We're probably right at the top end of that range. Yeah, we're way over here at 83. I've got that 85, 86 call spread, and then the put spread, I'm hesitant to move it up. I could move it up and collect more premium, but I think I'm just going to leave it at this stage. We've done pretty well in crude oil over the past few months. And again, I think it trades typically between that range, but we're at the top end of that range. So I'm going to leave that on. I'll look to close on any down move next week. And IVR is so low, I may wait until it comes down more before I put on any more. I like to trade crude when it gets below 70. I don't know if it's going to get back down to that range, but I am long oil going into next year. Same with corn. Corn, we've got, actually this, because it's the weekend right now, it hasn't opened. The numbers aren't quite right, but corn, we've got two put spreads on, the 470, 460 and the 485, 475. We need it to move up. We're break even about 480 and we're at 475 right now. So we need to move up. But as you can see, we're way down at lows for the year in corn. So we're going to leave that on long. And next week, let's see how many days we've got. Well, we still got 13 days. So we've got some time to move. But when it gets down, in that 5 to 10 range, I'll look to close and roll to the next month. But I definitely am long corn just because it's so far down. AMD has done pretty well for us. Actually, before that, let me go into AI. We closed out AI last week, and if we look at that, we can go over here on the right and look at the 30-day option chain, and you can see we made $489 just over the last 30 days. We put on in high IVR. Now it's 21. That's why we closed out. It came down a lot, but 30 to 60, and then we actually bought back and sold the 44 call as it moved down. And then we were actually testing our 32.5 put, but because IVR collapsed, we were still able to close out for 127 and then ended up 489 up. And you can see that big move down. But that's the benefits of trading high IVR. AMD is another one. Let's see. We're in the profit zone. We've got the 195, 125, 130 iron condor on. And in AMD, let's see what we've done over the last 30 days. Made 146 bucks with some iron condors and trades. AMD did have a pretty big move down, so we needed it to be up a little, but we've just got one iron condor on. I did close out a trade last week. Amazon, we're long a 135, 125 put spread. You can see we're profitable down to this 132.5 range. We're at 138 now, so we're in that profit range. So Amazon's looking pretty good. And I think we've we've done pretty well in Amazon, $369 over the last year. So not too shabby. Bank of America. Now the banks have been down, and that's where we're getting hurt. So I've got some leaps on in the banks, Bank of America, Citi. I'm just holding those. We make money as the stock price moves up, but we are down in those bank stocks. But I do like, just for that diversification, and I think the PEs are fairly valued right now, so I am long the banks. Any big move up, I'll sell a call against these leaps options and have a poor man's covered call on typically. Let's move on to DraftKings. Let's see, with DraftKings, we've I believe done pretty well. Let's see here over the last 360. Yeah, we've made $1,137 so far in DraftKings. A variety of trades that we've had on. Right now, we're profitable above that 27 range. And what we've got on, I've got two leaps right here in January of 2025. And then I've sold calls, the 31 call, and we're at 29.39, and the 30 call with 6 days left. So those make those two poor man's covered calls. And then I've got a 28 put. So I don't mind if I'm put the stock. I like it at 28, but again, it's had a bit of a move down just last week. A lot of news. DraftKings came out. The earnings were good, and I expected them to be good. They're doing great. However, Disney partnered with Penn, and now there's some competition with ESPN Bet is going to be the competition, and ESPN's pretty big, so I think that pushed the stock down a little bit. But I'm still very bullish on DraftKings going forward, and we're up $804 on what we've got on so far. Enphase, so that's the solar energy. We can look at, we've got a iron condor on. Let's see, let's make sure. I always like to look over on the right here to make sure we don't have earnings coming up. But Enphase already came out, and they had a big drop down. They're at 135, so that they are testing my short put vertical spread that we have on. And you can see that right here. Because we collected premium, we're profitable all the way down to 131. But you can see that chart moved way down. So I am long Enphase right now, and we've got quite a bit to make, $480, as long as it stays above that 135 and between the 135 and 155 over the next 34 days. Golding is a small one, gold mining. I won't talk about that. Google, we did a video on this. I'm long Google. I think they're a behemoth. They're going to be around for a long time. So any downtick, I do like to put on vertical spreads, because it's a pretty high priced stock. And for this one, 129 IVR is 8.5, so it's kind of low, but we are profitable in this range right here, and we're at 129, so we're still profitable, but we do need it to move up a little. IWM, the Russell, same thing, long the vertical spread. Meta, this was one where I was short because they had moved up so much and they were at highs, and now they've moved down a little, so we've been pretty profitable in Meta, but you can see we're profitable anywhere below that 325, and we're at 301, and we're in the 6 days to go, so another $47 to collect there in extrinsic that I'll probably just leave on, unless it starts moving up against me. I'll take $47 in a week, so I'll just let that ride. Medical properties, yuck, this one kind of got me. It's down to $8.07. It was at $9.96 last week. The IVR is still pretty high, but again, this pays a huge dividend, an 11% dividend. So I'm long MPW. It did move down, but again, since I'm long term, I'm just going to hold it, collect the dividend, and wait till it goes back up. I think real estate, and they're specialized in healthcare, they're going to do well going forward. So, just it's a buying opportunity is the way I look at it. Netflix, we've done pretty well in. We've got an iron condor on a wide range, 405 to 480, and we've done pretty well in Netflix. $2,800 over the last year in Netflix. So it's been a good stock. 6 days left. We've still got $107 to collect as long as we stay above that 405 and 480, and you can see that range. So I think we're in good shape there. Netflix is doing well. Palo Alto is one, Palo Alto Networks, that I know pretty well, and they are the leader in that cybersecurity. And they had a big drop on earnings that came out from their competitor Fortinet. So at that point, I put on a put spread last week, and we're up $249 this year. But you can see just last week we just put on that put spread for $1.86. So it's a $5 wide, and we're collecting $186. So over 1/3 the width of the strike. So they do have earnings coming out on the 18th. So it looks like the end of next week, and then we'll see where that goes. If it goes against me, I'll just roll that out and collect more premium right away. Palantir, it's been moving a lot between that range. It's been moving between 15 and 19, and now it's down at that 15 range. So if we look at the 60-day and Palantir, yeah, we're up 1051 just over the last 60 days, doing a variety of different trades. But right now we're a little bit long with the 218 puts, a leaps option, and then an 18 call that we sold against that to make this a poor man's covered call. So as the stock moves up, we make money. Above 18, we're capped out because of the poor man's covered call. But that's been a good one for us. PayPal, we did a vertical spread and rolled out. Let's see. Yeah, I made 163 bucks over the last year. So, but PayPal's way down right now and was kind of beaten up. So that's why I'm long. They're going to be good going forward. We've got the vertical that we put on 1/3 the width of the strike, and they're, I believe, going to come back, and that's why I'm long. Any big up move, well, actually IVR is very low right now, so we'll just wait till that comes in. The Qs. So here's where I'm short the NASDAQ, long the Russell. So we've got on the Russell, we had a put vertical. And then all these stocks, I'm positive on a lot of these. So I balance that out with some negative bets, and I just bet against the Qs, the NASDAQ in general. And, it was at highs, and now it's come down a little. So we're profitable, anywhere below that 380 range if we go in the curve mode analysis. And we've got some extrinsic, a little bit left there, $148 to make. And we've got the August 18th, the September 1st, and the September 15th. So 3 different tranches in 3 different option cycles that we've got on as well. SOFI, let's see what happened with SOFI. They're down 865. Again, you've heard me talk about this one. They're going to do well going forward and be a major bank. They are definitely a leader. At 8.65, we did another video on this, but SOFI is, to me, a buy. It's you got to be long SOFI. If we look at the 180 chain, we've done pretty well at 184. But over the long term, I think we're going to do really well. We're down a little bit now, but we've got we're controlling 800 shares, 300 shares outright, and then 5 leaps contracts. And again, we had a big drop, so I expect that. I mean, the stock could double, over the next year. So I'm not worried at all about SOFI. SOXL is one that one of our partners that commented on one of the videos, and please feel free to comment anything that you want to say is appreciated, any trades that you've got on. But David Alfonso commented, thanks David for this, but he mentioned this SOXL, which is a semiconductor ETF, and it's leveraged. But I really actually like that. The semis had a big drop, and surprisingly 27 million shares. So it's super liquid. If we go to the table mode and we look at the options, they're a penny wide, 33, 34. So I'm gonna, this is not it, SOXL. But it is liquid. Yeah, 10 cents wide, but fairly liquid. Actually, here at the 21, we're 209, we're 3 cents wide. So very liquid. SOXL, semiconductor. Thanks, David, for letting us know about that. I don't have a trade on yet because I just saw the comment, but you can see I've got one pending. So when the market opens Monday, I was going to put on a $3 wide and sell a $3 wide put vertical and collect $1, 96 cents. I've set it above the market so that I can adjust before the market opens, but that's a trade that I've got in the queue, and I'm going to go along with the put vertical spread. TDOC is a LEAPS option that we've got. Teladoc Healthcare should do well going forward. These guys are definitely players. They've purchased a lot of different companies over the years, and I think telehealth is going to be huge going forward. We've done pretty well. Let's see, yeah, $1,016 over the last year. So we'll keep playing that long. Once it does move up, it's down right now, but any big move up, I'll probably throw on a call against the Teladoc position that we've got on. Any down move, I'll buy another LEAPS option or the stock outright. But long Teladoc. Tesla's been really good. Let's see, they had a big move down. They're at 242 now. We made 419. Yeah, we got hurt last week in Tesla, but it's down to 242 at the end of the week, and it was 253 the week before. IVR is still real low, but anywhere between that 255, 270 range. If we look at the curve mode, you can see where we're profitable, and we need it to move up a little bit, and I'm confident that it will. Like I said, Tesla's had a big move down, so I expect it to move up at some point. Wells Fargo, another one of those banks. This one's done a little bit better than Bank of America and Citi, so we've done better in that one. But $408 over the last 365 days that we've made. We've got 2 LEAPS options on. I'll sell calls against those on any big up move, but I'm long the banks right now, so that's another one that we've got on, like Wells. And then ExxonMobil, this one's only got $3 in extrinsic left. I should close that out. There's 6 days next week. I've kind of put it on there as a reminder, but we've got the 195 put vertical. IVR is low, so I'll probably just close this out next week. And yeah, I think that's it. Let me know what you're trading this week. Appreciate the comments. Please like the video. Let's get this out to as many people as possible. And subscribe if you haven't already. Share the video with a friend. Thanks for watching, and see you in the next one.